Welcome to Wall Street Confidential, the show we give you the inside scoop as to what's really happening on Wall Street. I'm Greg Greenberg, here with Jim Cramer.
Welcome back.
It's good. It's good to be back.
Yeah, good.
Jim, markets are rallying. They got a nice bump from the factory orders, but I want to talk about the MasterCard results because I think they provide a lot of insight into what's going on. They really blew away the numbers, $1.57 versus $1.15 estimates. Revenue's up 24%. Is that an indicator of what the economy is really doing? The consumer?
No, I don't think so. I think that what's really happening here is that this is a company that even on small incremental increases in consumer spend can make a fortune. It's just got
so it's
such
a leverage.
Yeah, it's got the best levered model. I cannot emphasize to you how wrong the shorts, I can't emphasize enough how wrong the shorts are in this, because this is one where the tax rate was a little bit higher than expected. It's also one, by the way, where they could start an aggressive buyback. People worried about the lawsuits. They've been pushed back. That was the whole point of the change in the docket last week. I have been aggressively on this stock. It's now a triple, and I genuinely believe that estimates remain way too low. This is a company that has been failing. The street has not caught up to this.
So it's about 127 a share now, up about 11%. How high can it go?
It could go to 200 without a problem before it's expensive.
Okay, but back to the economic indicator. They did say that
it's accelerating revenue growth. I don't have accelerating revenue growth companies.
Consumers are charging about 16% higher, so they like that. And you also from Amex, you got good spending on Amex.
Right, but
they're more business, I guess.
I think this is still more of a conversion of cash to credit card than it is a sign of consumer spend. Now, consumer spend is obviously robust for that, but I don't want to have a takeaway of that. I think that the real takeaway here is that this company is much more profitable than anyone ever thought. And everyone had been keying on the idea that unless they put a charge through an increased charge, that they couldn't win. When they didn't put an increased charge, they didn't mention it in the conference call, people freaked out. That was a mistake. This stock could go much, much higher before it's expensive.
There you have it. The indicator is that MasterCard is just doing extremely well.
Right. Yeah, I mean, if this is a multiple expansion issue. When you have 24% growth, you got to question whether you shouldn't give it a 30 multiple.
There you go. Jim Cramer, Greg Greenberg. It's Wall Street Confidential.